YouTube, what it do? Lil Petty coming back with another stock market episode. So today we're gonna be talking about how to swing trade the options and how to day trade the options on the daily contracts and how to take profits quick and get in and out. So without further ado, let's get into this episode. I want to start off talking about McDonald's stock. So I'm gonna go to this right quick. I'm gonna get you guys equipped. So we took a swing trade in McDonald's stock and we finally locked in the profits today. I want to show you guys we bought it. This is our fill. We bought it on $7.29 and we paid $230. So $2.32, and we sold it today for $5.40. Now we're gonna go to the charts and I'm gonna show you guys how we set that up, what option we traded, why we decided to pick that, and then we'll get into the SPY trade that we made today for the day trade. I'm also in this Microsoft swing trade right now. I'm actually down $50 on it. We bought this the same day we bought the McDonald's call, and we're still holding this. We have 42 days left. We went ahead and decided to close out the McDonald's. It's at all-time highs. Maybe get a pullback and then go ahead and get back in. But I wanted to lock in those profits. So let's go ahead and get to the trade. So back on this day right here is when we bought the option for the call for McDonald's. And I want to go to what call we bought. We came out here to the September monthly, and we bought this 220. Boom. We bought this 220, and when we bought it, it was at, like I showed you right here, we bought it for $2.32. Now let's go to the chart and let's go to the daily chart and see what exactly I was looking at. So on the 29th, this was right around in this area, right around here. Now the stock market, the last time the stock market crashed, McDonald's, it only sold off a little bit. It wasn't like a huge correction as if you come to SPY right here. This was the correction in SPY back here, and then in McDonald's the correction was down here, and then we've been riding up, and even on this last pullback we haven't dipped down. So McDonald's is a strong stock. 1226 has not crossed, as you guys can clearly see right there, and this was when I got in right here. I got in I think after the earnings. It sold off. I held through because I kind of was waiting to see if we were going to get that cross. We bounced right off that cross and we're off to new time highs. So let's go ahead and look at the option, and I want to show you guys how these options function. And why did I choose all the way out here? Because when you go farther with time, and so look McDonald's options, they're not cheap, but they're look right here. You got the it's 18 IV, so implied volatility. The implied volatility is low. If you come over here to BYND, these implied volatilities are 50s, 60s, because it's a volatile stock. So when you play with when you're playing McDonald's stock, MCD, when you're playing McDonald's stock, you can go ahead and get yourself a little bit more time for cheaper. And that's like with my Microsoft one. Let me show you the Microsofts. So if you come out here, these ones are trading at 140s or $3. If you come up to say like the weeklies, they're still gonna be up there. So 140, you're paying 80 cents. So you might as well go ahead and get some time on these options, because you can actually hold through when if you can hold through on these pullbacks. If you're playing dailies and weeklies, you're not going to be able to do that because you have a specific day that this stock has to go ahead and hit. Now, as you can see, Microsoft is bearish, so we are watching out. I only put, I think, $200 into that trade, but I have time, and it's to break out like I'm thinking McDonald's is going to do. But as you see, we have that cross, so I am a little skeptical. We are watching this tight. Now, let's go ahead and get back to McDonald's. So like we said, McDonald's, go ahead right here. We haven't crossed. We touched the lines, and now we're up on the bullish. But I'm expecting some type of a pullback, so that's why I went ahead and locked in the profits. We could probably bounce back at this 119, somewhere in this range, and then continue up. But basically, when you're going to go ahead and start swing trading options, you want to try to find ones that you're going to be able to get time on. You can go ahead and swing the dailies and stuff, but that's a little bit more risky. So you go ahead and you pick more time out. So like Apple, for instance. Apple, it is bearish right now. We're on this cross, and it's actually coming down a touch. So say if you wanted to get some puts for Apple, I would come over here and look at the weeklies. So these are a little bit more expensive. But if you look at the chart, when you're trading them, these ones are going to hold their value. So you can actually basically just swing trade Apple, holding, you put $700 in the Apple, and you can swing trade it. You can hold it with time. The theta is not going to get to you. And you can see the chart right here. So these ones were trading up here. It crashed down. So if Apple's going to bounce back, you know, you got 100% gain if these ones are to get back in the money. And these are $600. Or say you wanted to go for the 220s, because Apple, we know Apple stock, it just hit 220 and now it's on a pullback. So if we can go ahead and, if you wanted to swing trade Apple, you would come over here and you would get more time. So, and with the time on the contracts, these are going to gain. The value is going to gain because you have time on the contract. So these contracts are going to fluctuate with the price of the option. So we're looking more with time on options for swing trading, holding. I held those McDonald's for, I held those for a few days. You know, I held those for 29, almost 2 weeks of trading. And these, let's go to that McDonald's trade real quick, because those ones actually pulled back. I was down, and then I came back because I held through and I had time on the contract. So if you have time on the contracts, time is going to be your friend. So you can clearly see, this is the chart right here. This was McDonald's option, the one that I held right here, that 220, and we bought it up here on the 27th. We bought it for like, I think it was 190. So we bought it right around here. It dropped down to 112. I held through, and then I just sold it today and locked in the profits, because as you can clearly see on this chart, McDonald's chart, it's been on the uptrend. And now today, if you would have traded the option, the dailies, the risky trades, you could have got these 220s. These are trading at 1 cent at the low today, and now they're at $1.70. So you literally could have had $5 in your account and bought some of these, $9, $10, 1 penny, $1, and now you could have had up to $200 if you would have traded this McDonald's daily option and sold. Now I'm gonna go to the SPX and show you guys that trade. SPY. We took a small trade in SPY. We spent $40. I'm gonna go show you the monitor. Activity. We bought these today. We made $46. We bought them at where is it at? Yeah, right here. So we bought it at 37 cents and sold it at 83 cents right here. So that was the trade. I'm gonna show you guys how that trade played out. So let's go back to the times real quick. Oops. Alright, so the field orders right here. So we bought it at 650 and sold it at 922. So let's go look at the times. So 650 was right around here. We got in right before the bearish cross, and then we locked it in at 9 down here. Why did I lock it in down here? We're overextended. Basically, I just wanted to be safe. I didn't want to try to ride it all the way down. Of course, we bounced, and look. So if you would have held those contracts would have went from $80 to 0, and then you would have just lost all your money because of the trade, the option that I took. The option was it was this 295 put, this 290 put. So I bought it right around here. Let's zoom in so you guys can clearly see it. So I bought it down here, and then I ended up selling it right around here. And now you can clearly see, because it fell out of the money, now it's going to expire worthless. So when you're day trading options, you got to be careful when you're trading the ones that expire on the same day. And you want to get in, get out, get in, get out, get ahead, you know. But yeah, that's I think I'm gonna keep this video. I'm gonna end it up right here. I talked a lot, showed you guys how to trade swing trade some options. Pick the strikes that you know that are gonna basically hit. For instance, that Apple. Let's go right back to Apple real quick. Oops, AAPL. So Apple, we would come over here, look at these Septembers, 210s, 215s. I would probably get these, to be honest, if we're gonna bounce. But if not, I'm kind of cool on the bearish side, but not saying I'm not gonna go bearish. But we got that pullback from that stock, from the stock crash or whatever you guys want to say it was. But now we're kind of back up trending. It looks like we can come back up here and test these highs. I would wait to see it break this 205. But yeah, so if you wanted to swing trade a stock like Apple, I would look in something with some time, 42 days, pay the premium, and just let the option play out how it's going to play. As long as you make sure you manage your risk. And yeah, take your wins when you have money on the table. Just like how I took the McDonald's win. I didn't want to hold for the 42 days for what? I just closed it out. I made 300 and something bucks. You know, 100% on my money. So that's it for this video. Lil Petty's out. Y'all be safe. Have a good weekend. And yeah, peace.